So key level for today, you want to have this daily high. That's our previous day's high. I'm also going to have the rejection block here, which is just the highest body. And then we have all-time highs here. So if we continue expanding upside targets, that's what we're looking for going into today, as long as the daily candle remains bullish. So from CPI, they just immediately rocketed higher. I'm not looking to get positioned before anything like that. So we'll see what we get going into the 9:30 open here in about 5 minutes. Keep in mind, this is the previous day's high. This here will also be a significant buy side liquidity pool, this swing high here, which is Monday's AM session high. And then above that, we have all-time highs. So that's what I'm looking for if we continue tearing higher to the upside. So far, right, everything is extremely bullish in this market, right? Top down, several breakaway gaps for the 15-minute, in a hurry to reach higher. 5-minute not filling its imbalances and just taking off to the upside. So next buy side is that 21,669 level. JF, brother, the 21,669 is relevant to you under what pretext again? Yeah, let me show you, JF. Yeah, so one of the things that you want to do when you're looking at your liquidity is a bit more advanced, but something you guys are more than capable of using. So we have this high here, and this high here, right? Those are the obvious highs on electronic trading. But what you also want to do, because the algorithm is going to refer to these specific highs, it's going to refer to liquidity on the regular trading hour session as well. So that 21,669 level is equal highs on the regular trading hours. So you always want to reference your liquidity on regular trading hours because the algorithm will use that liquidity. Like it's going to refer to these old highs and lows that are time-based. So like I was saying on electronic trading, you may not think those highs are important because it's traded through it. But again, the algorithm will refer to those levels there. All right, guys, so about 1 minute till the macro window here. Still inside this range. And again, like I told you guys, whenever the market gets inside a range like this, high and low, I become really patient, right? Because then inside this range, it's really easy to then want to just take all types of trades, right? Go long here, go short here, and then all it's doing is just banging around. And then before you know it, we're in deep drawdown or we're 3 to 4 trades in. The way you avoid that is just being patient when we're in a range. So what am I going to wait for? Time, right? Which is the macro window, and then price to see if it wants to give me signatures of what I'd want to see during the macro window. What I'm looking at on the 15 is what we've done here. Is drop down into a 15-minute fair value gap. So we've traded down into a 15-minute fair value gap. So again, nothing's technically shifted on the higher time frame. So this is something that's really helpful for me to avoid taking premature entries on the lower time frame, because many times it'll just be dropping down, and on the 1 minute, man, it looks like this thing's going to zero, right? It's a major reversal, and all it's doing is retracing to a 5-minute or a 15-minute fair value gap, right? So that's why I'm not using this fair value gap as a short right away. I have to see how we trade there, right? Do we leave some of it open? Do we break down aggressively from that? Then I'll look to take a lower time frame entry. So what I'm looking at with this fair value gap is, do we want to get above it, use it as support, treat it as an inversion, and trade higher into the buy side? All right, so I'm going to look to take a low risk long here at the high of that inversion gap. Stop just below here. So stop below the inversion and the down close. Keeping very tight risk on the trade, and then we'll see if we can get a run into the highs here. And trim a bit more risk, just about 10 handles of risk on the trade, so very low risk for this account of trading. But still below the inversion fair value gap, this fair value gap, and this breaker here. So I'd want to see it be sent higher from here. Rolling the stop to better than break even. So risk-free trade here. All right, guys, there's a limit order. Let's break it down here. Hello, everyone. Good afternoon. Happy Wednesday. Hope you guys are doing well. I want to do a market review here on what I was looking for today and specifically teach you guys how to use macros and the macro windows. What I look for, when they're useful, and how I use them. So with that, one thing I want to emphasize before I even get into the details is I don't want you guys to think I have some magic secret here with macros. Right? You still have to understand top-down analysis, how to find the draw on liquidity, which is why even though I'm going to teach you about macros in this video, we're starting on the monthly chart for top-down analysis, right? Because it still requires an understanding of everything else to make it effective, right? So again, in summary, macros are not a standalone thing. You still have to know how to read price and know what you're looking for. So starting from the monthly time frame here, we can see expecting a bullish month of December, which I did discuss in the weekly outlook on YouTube. So all that information was made public here ahead of the week. My opinion, analysis, and what it was that I was looking for. So the monthly chart is bullish. You may be asking, well, Dylan, aren't you an intraday trader? Why are you focused on the monthly chart? Well, if I have clarity as to what the monthly chart is doing, that's naturally going to make the weekly chart easier. Right? So now going into the next step of the analysis, weekly chart. This is where I usually start my higher time frame analysis for weekly direction and my daily bias. So looking at this weekly candle, we dropped, made a low Monday going into Tuesday, which in a bullish week we want to see, right? This is like the Judas swing or the manipulation. And then from there, we expect it to expand and close near the high, right? So the weekly chart sets our bias. And one of the things I was emphasizing this morning with the weekly chart is it helps really keep things in perspective, right? Because it's easy to drop down into like an hourly or even a 15-minute chart and think, oh man, this thing's cratering, right? The top's in, it's over. But if you just go up to a weekly chart, you'll see everything is still bullish, right? It was just a short-term retracement on the weekly candle. Everything is still pointing north, indicating we're bullish. Daily chart. Now this is where I refine my weekly bias for precision. So we had this this daily fair value gap here that we traded into. So Monday, Tuesday, making the low of the week, which is what we expect in a bullish week. So the bias is bullish, wait for time and price to align, right? Tuesday, and then the daily fair value gap here. We had 3 fair value gaps last week on this displacement to the upside. When that's the case, that's indicating the market is extremely bullish. And in those instances, I never want to see this first fair value gap traded to, right? Because that's a breakaway gap. We prefer to see most of the accumulation take place in the upper fair value gap because that'll indicate the market is bullish. The precision is in the details. So if you look at this daily fair value gap, look at where the body's stopped here. And then we open low. Upper quadrant, making the low of the day, and then leaving some of that fair value gap open, which tells us what? Bullish. So you see how just the monthly, weekly, and daily will prevent you from trying to call a top and short every single market structure shift. So again, you always want to focus on top-down analysis because even when you see my 1-minute execution of me going long, or rather that's already been shown in the video, when you study my execution, and you see it on the 1-minute chart, don't get fooled and think that's all I'm doing. It's how all these factors come together that gives me top tier precision on the 1-minute chart. So body's respecting that, leaving these imbalances open, indicating we're extremely bullish. So the target was the swing high here on the daily chart, and then beyond, because we're at all-time highs, trusting buy models. All right, hourly time frame, we have these smooth lows here. Market dug down into that on Tuesday. Also the daily fair value gap. What you'll notice is the body staying in the upper portion. That's a signature we like to see for bullishness. And also if we're bullish top down through our macro perspective, and macro perspective you get from the monthly, weekly, daily. If we see the market drop down into sell stops, that creates a buying opportunity, right? Because that's where smart money is going to be buying the sell stops here, right? Because they entice people to put their stop because it's been going higher. So who's been making money? People on the long end. So they have to do what? Trail their stop. So when they leave all these equal lows here, and then they take it higher, that gets people to jam their stop loss here. They get taken out, and then the real move happens to the upside. So fear notes, before any significant price run, there's always going to be a run on stops in the opposing direction. So hourly chart confirming what we're looking for as well. Right at 8:30, they just sent it higher off the CPI news. You notice the bodies there respecting the upper portion of the daily fair value gap. First target was the previous daily high here. And then we had the high from the AM session on Monday, and then all-time highs, which was the intra-week high, right? All levels that act as a draw on liquidity. But of course, we don't expect it to just stop here and reverse because we're at all-time highs. Again, we want to keep trusting buy models, keep looking for higher prices. All right, so for the 15-minute, looking at the targets, again, previous day's high, the AM session high from Monday, and then all-time highs here. So for high probability trade setups, you want to have at least 3 time frames in alignment, right? So I'm about to show you how I was able to align the 15-minute, the 5-minute, and the 1-minute for a trade setup that I was able to take here. So I did miss the run in the AM session, or at least the first run, because at 9:30, the market just took off higher, right? It didn't retrace and offer me a discount. And again, I don't have a model that allows me to chase. But once the market retraces to a short-term discount, which is this fair value gap here, and again, discount is all relative, right? I wouldn't expect it to trade to like the low of this range, right? Just looking for the trade in that fair value gap and then trade higher. But what I want to emphasize is that your highest probability trades will have at least 3 time frames in alignment. So in this example, it's going to be the 15-minute is bullish. You're going to see the 5-minute and the 1-minute all pointing higher. However, if you can align all the time frames like I'm showing you here, then it's even more precise. When you have the monthly, weekly, daily, hourly, 15-5 all firing in the same direction, that's where you're going to get your best trades. But in a minimum for beginners, you at least want to have 3 trades aligning for your trade setup. So looking at this here, the all-time highs were taken out. Market retraces into the 15-minute fair value gap. But what you're going to want to notice is what time it drops down into here, right? So we hit this 15-minute fair value gap at an important time. So what I'm looking for is when the market drops, does it stay in the upper portion and do we displace higher? And then what would the draw be? This high here, because people are always trying to call it top in the markets. So when they drop it here, people are shorting that. So I'm just going long here, trading long into their buy stops above market price. So the 15-minute here, this was my higher time frame key level. I'm not making the argument that the 15-minute is a higher time frame, but if you're trading the 1-minute relative to the 1-minute, it is a higher time frame key level. All right, so here's that 15-minute imbalance. We see on the 5-minute, they drop it down, take out sell side. So a short-term low has been taken out when we're bullish. So when I say I want to see a short-term discount, that's what I mean. I'm not necessarily referring to, because I always get that question, well, you're saying it needs to trade to a discount. That's all the way down here. If we're bullish, I don't even want to see all that. What we do want to see is the market trade below a short-term low and into an imbalance. And if it does both of those during a macro window, man, you've got a beautiful setup coming up. So on the 5-minute chart, sell side taken here, and this is a sell side liquidity pool on the 1-minute chart, but also trading into that 15-minute gap. And then what do we have here? Equal highs here and here. So I'm going to label that. And that was the draw on liquidity for the trade. All right, so one of the things I want to reemphasize here is, again, I did miss the morning run here at 9:30. At 9:30, it just took off without me, didn't give any short-term retracement or run on stops for me personally to get long. So I just had to let the market go, right? I don't chase it. I don't get upset because, again, when you know what it is that I'm sharing here and you know how to read price action, there's one thing that you understand, that there's price runs and there's setups every session, every single day. So the key is just to wait for your model. So what I was waiting for here was, again, I want to trust buy models. I want to continue going long at all-time highs. I don't want to try to call it top. So what do I need to wait for me to be able to go long? The market drops here into this old low. So this is doing what? That's purging sell stops. So sell stops have been taken here, and we're also dropping down into that key 15-minute fair value gap during time of day. So one of the things I want to emphasize is if we hit a higher time frame key level during a macro window, you want to expect a nice reaction. And that here is the 15-minute fair value gap and run on sell stops. So now, once I get that, what are things that I look for in macro windows? Well, the macro window here is 1050, 1110. What I want to see is a run on stops in the opposing direction. And then I'm looking for displacements or breakaway gaps to the upside. So we drop down, clear sell stops, hit the 15-minute gap, and then how do we trade there? Does it give a reaction indicating it's bullish? It does, right? Because it displaces higher with the fair value gap. The first fair value gap in a price run, we want to see that one partially left open. And you'll see here it couldn't even touch midpoint, which indicates the market is about to run and run quickly. So as the market was trading higher, I was trying to key my entry here off this inversion fair value gap. For some reason, I was hitting the blue button in my execution, and I wanted to get filled here as it was trading around consequent encroachment and trading higher. But it ended up filling me at the high of the inversion fair value gap. Not a problem, still able to manage the risk really well with the stop below this order block here. And this down close candle is an order block because this is an institutional order flow entry drill. So I can trust my stop loss there, as you saw in the execution video, right? And not wanting to see it come back to this gap because it's going to be considered a breakaway gap. Inversion fair value gap, market closes above it. We use it as support, which we want to see. Equal highs here and here. And again, these are the buy stops from retail, trying to call it top. So they took it higher, cleared off the all-time highs here. They create a bull flag. They drop it, stop traders out. During the macro window, 15-minute fair value gap, displacement, fair value gap here left open, displacement leaving this imbalance open, all things we want to see, and then the market just tears into the buy stops here. So not a monster trade, nothing crazy. I think about 600 bucks added to the equity with one mini, but nonetheless, if you ever miss a price run, just be patient. Understand what you're looking for, wait for the setup, and this is how you utilize macro windows, right? Because macros are going to run to the untapped liquidity. Where is that in this context? It's higher because everything we talked about on the monthly, weekly, daily, hourly, 15 and 5 minute. So when we understand it's bullish and then there's equal highs and then they drop it into a short-term discount, then you're going to expect the macro to take off. So what I specifically look for in the macro windows, again, as a recap, is where's the untapped liquidity? That's up here. Does the market displace and start showing signatures that we want to see, right? Breakaway gaps, imbalances left open, run on stops, and then rejecting those stops, right? All things that I look for high probability trades during the macro window. Almost forgot. I wanted to show you guys the executions as well. So you can see going long at 21,708, the high of the inversion, and then covering just beneath that high. It was CPI, so I was content to pay the trader and keep the day moving from here. And lastly, here you see AMP live. The demo accounts do not say AMP live. With that, guys, take care. I'll see you on the next one.